Hello, thank you, Lisa. Thank you, Sarah, for joining us today. Hope you're all well. Craig, of course, thank you as well. So following on from the session that I've done around the broker research, we're going to focus on 5 questions for the panel debate today on areas that I really just wanted to delve a bit deeper into. So I'm going to delve straight in. So the first question is around interaction with customers during the pandemic. We asked brokers if this had changed, if they thought it would change going forward after lockdown number 3, etc. Obviously, technology has played a huge part in that. But Sarah, from a broker's perspective, how do you feel it's changed for you with your interaction with customers?
I think for us as a brokerage, it probably changed less than for other people because we've always operated our business model from home. So our ladies are all working from home, predominantly doing telephone phone appointments. But where in the past Zoom appointments were considered a bit strange for our customers, they were a bit, okay, I don't know about doing a video call, you know, that wasn't normal. Now everyone does everything on Zoom, quiz nights, family get-togethers, anything is on Zoom. So now it's a very normal thing for us to be able to say to the customer, would you like a phone call or a video call? And more often than not, they are choosing a video call because people are wanting that bit of human interaction now. I think 6 months ago it was a bit different, and I think people were, you know, quite happy to still be on the telephone, and Zoom was kind of, they're dipping in and out. But now that we're in lockdown 3, I think people are really needing that continuous human interaction, and we can gauge their emotions so much better if we can make eye contact with them. So we always try and do a video call when we can. So I think it's just normalised what we were pushing for anyway at the Mortgage Mum. And I think people now can see they can do their mortgages in their pyjamas and, you know, be at home, and it's perfectly fine. You don't have to dress up and get down to the bank anymore and have it formalised. It can be very relaxed, and that's working well for us.
Yeah, absolutely. That's a good point, actually. I think I remember everyone dreading, why is someone FaceTiming me, and panicking and cancelling the call, and you wouldn't even think of answering the phone in that way before. Thank you, Sarah. Lisa, how about from a club and intermediary general network perspective?
Well, I think absolutely, yes, interactions changed with our members as well. So we probably adopted an approach really in terms of we're in this together. It's good to talk. Never feel alone, and we're here to help. So those are probably the 4 mantras that we sort of set out in terms of working with our brokers. So, you know, our telephone team, we had to divert calls back to home. So they were answering phones from home, and equally, you know, they were using websites, and we were communicating in terms of policy changes very, very regularly. Our sales team, they've very much been using telephone and Zoom meetings, and had some themed activity, bespoke type workshops as well. And I think probably one of the biggest successes that came out of this was we launched a gym, a mortgage gym, and that was really, really interesting. It got the creativity sort of flowing in terms of our marketing team, but on a serious note, it sort of gave 7 different sort of workout areas for to support brokers really, in terms of fighting back, their well-being, you know, how to keep motivation levels high, how to prepare your offices if you are returning, and lots of activity on that gym. And I think that's really helped, and we've had really positive feedback on the members, from the members as well. And of course the major change that we did is we actually ran our conference, which would ordinarily be face-to-face. We actually ran it as a virtual conference, but there was a blend of a bit of live studio. So a couple of us did get to a studio. We did some videos that were pre-recorded, and we did some live sort of Zoom links as well. So we had to adapt, and I think that the key thing for me here is that actually there has been some really significant upsides here. And we have been able to engage with more people on a more individual basis. And we've actually had time, all of us, to actually look at working on the business instead of within it day to day. And I think we mustn't lose some of the upside that we've gained from going through this last 12 months of dread. So, yeah,
absolutely. It's something that I haven't really thought about that much, but everyone has become more creative, and you probably have built better relationships with colleagues, customers than you would have if you were sat in an office in a formal hour-and-a-half interview. No, that's a good point. Thank you. And Craig, from a lender perspective, obviously we've gone from an office, 500 employees all working together every day. What's your take on it?
Well, the first thing I'd say is I probably need to get myself down to Lisa's mortgage gym. I think, yeah, definitely lockdown's been a challenge in that perspective. Definitely not as fit as it used to be. And then, you know, Sarah talked about lockdown 3, and as we know, sequels tend to get worse and worse and worse. And this definitely feels like the worst one so far. But yeah, from a lender perspective, I think it's been a massive change for everyone, but I think especially for the sales team. So our sales team, the BDMs, were 100% out and about every day, 4 physical meetings a day. Then they go from being out the whole time. You speak to anyone in sales, they'll always say, why do you work in sales? Well, I couldn't spend all day sat in the office. And of course, they then go to being locked into their house 100% of the time. So a huge change for them, having to work remotely. And we're quite lucky that we have a digital sales process. We don't have any paper. We've got individual dashboards for each broker we go and see. So we can share the MI and the dashboard remotely, so we can have still have a really good interaction and share the presentations remotely. So I think it's not quite as good as seeing face to face, but it's pretty good. But I think with all these things, there's obviously some enormous downsides to COVID and the way we've been working. I think, you know, we're desperate to get back to normal, but there are some opportunities as well. So if I look at this webinar today and the webinars we've done, so, you know, we didn't do regular webinars to brokers. We'd do lots of events, and typically an event you'll get maybe a maximum of 100 people, and that's totally restricted. We've got to go around the country, and, you know, people have to travel, which is a disincentive. Whereas, you know, we regularly get 1,000 brokers on these webinars from all parts of the country. So that's a really good example of something that we couldn't have done without COVID, and that's something that's really positive. And also from a BDM perspective, there's no drive time, so they can be more efficient. Some of the really remote areas, remote parts of their territory, they can, you know, be there at the flick of a switch on Zoom. And also things like, you know, we've launched into Northern Ireland during the pandemic, and that's been a really efficient way. We've spoken to most of the Northern Ireland brokers. We've spoken to all the ones that wanted to speak to us, and we've managed that out of our Scottish BDM. So that would have been really hard to do pre-pandemic. So I think, you know, it has been very painful, but it's just trying to find those positives and hold on to them.
I think actually it's quite surprising. I think at the beginning of lockdown 1, it was a lot of what ifs. What are we going to do? It's not going to be as good, but there's definitely a lot of silver lining and positives to take from this. That's a good link actually, Craig, in terms of BDMs and interaction with lenders and BDMs. One of the questions that we asked was, do you think this will change? What more do you want from a lender, and how do you want to interact with your BDM? Lisa, if I come to you first around BDM interaction, have you seen that changed at all?
I think certainly a big shout out to the Kensington events. They've been absolutely amazing, and I think those should continue. You know, and I think where it's been a little bit different has been that this is it's been more general market messages. So that's really helped, I would suggest, intermediaries in positioning what is going on with their customers. And, you know, it hasn't been a product push always. This has been about, you know, we're in it together, and what are the challenges? And I think the dialogue has been really open. And, you know, we all know that there's been challenges, and by having this open and honest dialogue, let's share the issues, let's share the concerns, and how can we work together, I think has been hugely positive. From a lender engagement with us. So I would like that to very much continue. And things like the research that you've done, again, we can all sit in our own businesses, but, you know, getting that information, sharing it, reviewing it and just looking at exactly what is happening out there, because sometimes we can, as institutions, sometimes we can perhaps come a little bit remote from what's happening, at market level. So I think that we still should take some of the really positives that we've learned.
Yeah, absolutely. Thank you. And Sarah, coming to you, anything you'd like to see from lenders or from BDMs specifically?
Yeah, I mean, I have to say, I think for the BDMs, it's probably been, like Craig said, one of the hardest hit by what's happened, because they're social people. They chose that role for a reason, to develop relationships and to be, traveling and seeing people face to face, and that has had to stop for them. And I know from quite a few conversations I've had with them that a lot of them have struggled with that transition and are very keen for that to continue for their own mental health and for their own work-life happiness. So I think, whilst I think it's super efficient that they work from one place and they Zoom call and, they can erase like their driving time and be more petrol efficient and all of these positives, that they don't have to drive up and down the country, and that's brilliant. And from our point of view, they can get 10 meetings done in a day rather than 4 or 5 people that they can perhaps see at a push. I think that job satisfaction and that well-being is a balance between the two. I've been really impressed with the majority of BDMs. I think they've worked exceptionally hard to translate what's happening quickly. They must have been inundated at points, but some have really stood out, but they have generally, as a whole, I've been really impressed with them in that role. And I think from lenders post-pandemic, I think we're entering a new tax year now, so I'm really keen to see what lenders do for the self-employed, and in regards to that year of accounts that lots of businesses have been affected by COVID, sadly, and what they're going to do about that. I'd like to see more human takes on cases. I'd like lenders to really take a full picture of the fact that this was unprecedented. This is not a reflection on how well a business can or can't perform. It's literally a crisis. So I'm really keen to see how that translates to lenders, and I'd really like to see some bravery there from them, that they can, put this in the box that it needs to be put in, really, for our clients, whilst being safe and responsible and lending responsibly. So that's a real interesting point for me. And I was going to say about the high deposit, but we're already seeing such support coming, obviously, with the government guarantee scheme and other lenders. So that's great to see that happening already. But that would have been something I would have mentioned, because we've just got so many first-time buyers that are just so sad. They're living at home. They've been at home all year. They desperately want their own place. They're saving, and they're quite demotivated by what's been happening. So it's nice to give them a bit of news.
Absolutely. And we'll come back actually to that point, Sarah. It's my last question just around areas of the market. So I'm keen to ask you a bit more about that. But Craig, is there anything that you want to add at this point?
No, so obviously I've talked about how our BDMs have managed. I think the key thing now is really to, we need to kind of lead where we can by things like having a digital sales process. But I think the key thing is we need to now respond to the new needs of brokers. And I suspect, like most businesses, some brokers will all go back to the office. I know some of them are still in the office now. Some of them have opted to all work from home and will continue to all work from home, and some will have a hybrid model. So we need to respond to that. And one of the key things about responding to that is to understand how brokers feel. So really want to say thank you to the over 500 brokers who gave us feedback and submitted answers to this survey, because that's really helpful for us. So I really appreciate that.
Yeah, absolutely. The next question that we wanted to ask those brokers and really understand is what was really important to them when they were choosing a lender. So we kind of gave the option of price, which historically has always been top, product, policy, and then service. Interestingly, when we did this survey last year, price was still quite high, but product and policy now sits at the top, with price and then with service. So do you think, has your personal perceptions changed on this? Lisa, I'll come to you.
I think I think there's no doubt that clearly it has changed. I think the brokers start on the basis of being able to find, the most suitable product with the features that they've identified from the fact find in terms of the current and future needs. And they look at the whole of the market. So it is a blend for me. It's a blend of what's needed, what's available, what's the cost, and the service. So I do think all elements come into that, and certainly in the world that we've experienced recently, with COVID, with people on furlough, self-employed, high loan to value restrictions, then clearly, product and criteria has been fundamental. And with the stamp duty as another added consideration, then of course services as well. So I think it's probably moves from customer to customer a little bit. We have obviously seen an element of risk-based pricing as well in some of those sectors, but I think that will change. All of that will change in terms of, what is the priority. It's all linked very much, in my view, to what the customer needs and what is available. I think that's as much as I would sort of say on that.
Yeah, thank you, Lisa. And Sarah, coming to you.
Yeah, I think like Lisa said, before we lived in a bit of a simpler world, really, where you could technically go online and a customer could go online and source their own mortgage, really, because it was pretty rate driven. And so we used to have most of our conversations were trying to compete with the likes of Money Supermarket and making sure they understand why we've picked a certain product over another based on fees and not just rate. Now, we're so needed as brokers. I just simply don't think customers can do it on their own anymore. And so it really is about our knowledge around the products and criteria, and that's where BDMs are so important, because the market's just changing so much. If it's not furlough, it's like Lisa said, the stamp duty extension and the fact we need to be quick. There's just so much more to know as a broker, and I would say 8 out of 10 cases are not price driven anymore, because ultimately they don't have the luxury of that choice, because everybody's situation is so affected in different ways. So our job completely changed, but it does mean that gone are the days where people thought we might turn into robots and not have a job. We are so needed, and that's what this is showing our customers as well, that actually they need people in the middle of them and a lender.
Yeah, absolutely. I think robo-advice was probably the buzzword about 5 years ago, and it went on for a good few years. But actually, as we've developed, and the pandemic specifically has really changed the landscape. Craig, anything from you from a lender perspective?
Yes, I think, as Sarah said, actually the kind of complexity, and if you look at self-employed and how difficult it is to place a self-employed case, is actually really helpful for brokers. I saw a stat in the last couple of days that said last year 78% of mortgages were placed through a broker, and that's an all-time high. So in a world of artificial intelligence, in a world of all the aggregators trying to get into brokers, actually more and more people are finding that they want to, because they value the advice and the service, use a mortgage broker, which is brilliant when you're a mortgage broker. And I think, the dynamics totally changed. So especially for the last few months, question number one is which lender will say yes to this customer? So it's criteria. I guess question number two is probably affordability. So, these are the 5 or 10 lenders that will say yes, but which one will lend them the amount that this customer needs? Then service becomes really important, because if you're trying to hit a stamp duty deadline or a help to buy deadline, you need to have them with a lender that can do that. And then I think price becomes kind of last, because you can always move them in 2 or 5 years time. But I think the most important thing is getting that customer the right property. So I do think it's completely turned on its head. But that's, it makes life difficult for customers, but that's a great situation for brokers, because customers really need that added value that only a broker can give.
Yeah, absolutely. I think we'll all agree on that one. So next, we wanted to understand from brokers what they thought their business would look like in 2021 and had it actually changed in 2020. So from a mortgage industry perspective, Sarah, I'll come to you first. What do you think 2021 is going to look like?
Well, I think everybody thought it was going to be a crash around about now. Well, actually, a crash has been threatened since September, October last year. And I remained positively optimistic. I thought, well, I think the government are really showing us that they value our industry, and we're an incredibly resilient industry anyway. But they've really put a lot of, faith and money behind our industry to try and keep it going. So that shows how important it is. So I think we're going to be busy. I don't really foresee that. That might be famous last words. You shouldn't really predict things like that because we know life is so unpredictable now. But I think with the 95% scheme coming in April, that's going to keep us busy. And now the stamp duty is all the way to September. We've noticed a huge increase in people wanting to buy now because they still mentally know they can save money, and that's enough of an incentive for a lot of people to act now rather than wait. Perhaps towards the later part of the year when both of those things are dropping off, we may, but then life may be hopefully back to normal by then, and we'll be looking at a completely different landscape once again. So I think we're going to be busy, and I think because we're going to be needed, like we just talked about, I think any drop in business that may happen is going to be compensated by the fact that so many people will use a broker now. And I think because people are emotionally overwhelmed with their lives, with the amount of things they've had to deal with, anything they can do to relieve anxiety and stress with those important things is so needed. So if we can hold people and take that stress away from them or make it easier for them, then I think that's so important this year more than any other. So I think it'll be good. I hope.
Absolutely. Yeah, no, we're all hooked together. And Lisa, you've got a really broad perspective across LSL, so from a network and a DA. What are your thoughts for this year?
Well, I concur with Sarah. I think it's positive. I think when we started the year, we were looking at very, very broad ranging predictions for the year. They were going from 215 billion to 283 billion. And I think now it's beginning to stabilise somewhere in the region of 240, 250. We finished the year at 243 in 2020. So that's sort of suggesting fairly flat. I think that the comment made by Sarah, absolutely, in terms of intermediary, hugely important. We've seen the benefits of the vaccine programme. We've seen the unemployment levels haven't hit the peak levels that were predicted. We have seen some extension of furlough. I think we're fortunate, again, I concur, in our marketplace that mortgages and financial services have been supported by the government, and equally the construction industry as well. And all this is sort of underpinned, if you like, by people needing to live somewhere, and we have got a lack of supply versus the demand. So we're all in either the home ownership or the rental market as well. So the opportunities are massive. I think with quarter one nearly at the end, and where that time's gone, I don't know. But Rightmove are supporting that there is more interest, and I think when we got the certainty about the journey and roadmap, both from the government in terms of when we'll get a house, but equally in terms of stamp duty, I think tentative sellers who were perhaps waiting to see have started to put the action and the wheels into motion. I still believe that there's mass opportunities in product transfers, because we still get a fairly low penetration rate in the intermediary market. I think protection is still there for financial services. It takes away the financial worry, if not the emotional part of it. And I think we've had a hard 12 months, and I think protection sales is something that we should be talking to customers about, and opportunities to revisit. Because we've seen people doing house refurbishments, needing extra money to make their garden better because they're not going off on holiday. So that's all extra borrowing. Holiday homes, relocations, there's just so much going on, and I think that client bank is king. And whilst it's complex, whilst it's a wee bit more difficult, it absolutely plays into the hands of the intermediaries who are specialists in this market and can take those fears away and, you know, as Sarah said, guide people through. So I think it's a positive outlook from my perspective.
Yeah, absolutely. No, that's good. Thank you. Thank you, Lisa and Sarah. Craig, we covered quite a bit there, but is there anything else market-wise you think is a surprise so far, or anything else that you want to add for this year?
Well, the first thing I'd say is I need to stop making predictions, because last year I predicted that we'd have a really bad year and the market had a really good year, and that about now would have a massive cliff edge and would be falling off the cliff in April. So that's not happening, which is great news. But yeah, I think the fundamentals have got so much better. So you know, you've still got the stamp duty. I think probably the big difference last year, you had lots and lots of demand, but not enough supply, because lenders were struggling with payment holidays, with working from home, etc. So you had a real issue with high LTVs. A lot of lenders were capping out at 75 or 80 LTV. That's now, you know, we're back at 90. There's lenders coming back at 95. You've got the new government schemes. So, you know, I think supply and demand is much better matched now, which is really good news and keeps the market going, because there's a lot of people that last year who couldn't take part in that market because they didn't have a big deposit, and they're now kind of back in play, which is really good. I think probably the bit that surprised me with the start of the year is buy-to-let. So buy-to-let's been the strongest part of the market so far this year. Now, part of that will be clearly they still qualify for the stamp duty discount, so great time to buy a buy-to-let. But that's really positive, because people write off the buy-to-let market all the time, and it just keeps powering through. So yeah, in line with everybody else, I do think this year will be good. Hopefully, for once, my prediction will be right.
Let's hope so. Perfect. Right, last question, and we've covered some of this already, but one of the questions that we asked the brokers on the research is what areas of the market they thought were overserved or underserved. Self-employed and older borrowers being the highest underserved areas, and new build being the most overserved area. Do you agree with those comments, or is there anything different that you think would come under those two categories? Lisa, I'll come straight to you.
Okay, so I think self-employed, no surprise, in terms of being a difficult market to serve. Not surprisingly, with all the situations of policies and impacts and specific industry sectors being hit as well. I think Sarah's comment earlier on the accounts and how self-employed people are going to be judged in terms of policy. You know, already there was an immense amount of variances across lenders from, you know, the last year's trading with a projection to an average of accounts. So that's all quite complex. Business bounce back loans, self-employed income support scheme, all these things now are areas that perhaps take a little bit more time, and I think plays into the specialist market. The specialist market, I do think, for self-employed is something where, you know, an underwriter can take perhaps in the specialist market a little bit more of a view. They hear the story, they can listen to the situation. It doesn't sail through pipes. Somebody sits down and looks at it. It's not an automated decision, but that does take manual intervention. It can impact service and the type of underwriter who underwrites that case. So I think it has been tough, that market, self-employed. And as for older borrowers, again, yes, I think that's very much linked to, you know, vulnerable customers as well, in terms of older borrowers. There's so much wealth in property, and some people have redeemed their mortgages a little bit more during lockdown, but some people have equally, you know, tapped into their pension funds as well. I know, given the flexibility that's been afforded in terms of 55 age group. Bank and mum and dad's not as affluent as they used to be. I can certainly say that from my perspective. You know, bank and mum and dad is perhaps a little bit more cautionary, given what we've seen, and therefore, you know, that is old borrowers. And I think, you know, people are living longer, and long-term care costs are very, very expensive. And I think there's still a bit of a journey to go on that in our sector. So I think what's really positive about the older borrowers, I think, is we're finally seeing a lot more sort of working together of trade bodies, the regulator, to revisit the needs of this sector. And whilst we've got, you know, products that are, you know, interest only, lifetime, equity release, RIOs, and all these names, I do think we need to address as a whole sector what we do to support more of those older borrowers.
Yeah, absolutely. Thank you, Lisa. And Sarah?
Yeah, I mean, I accidentally answered this question earlier without meaning to. So for fear of repeating myself, I am very passionate about the self-employed, I have to say, because I think what COVID has taught us as human beings, not just in this industry, is that life is very precious. And I think a lot of people have had that realisation, a lot of city workers particularly, in my area, we're very local to London, and they're coming out of the city because they've got off their, you know, we live on treadmills and we live in our rat races, and we don't even know that we've been on a treadmill for years until we have to get off it. And as soon as you get off it, you then go, I don't think I want to get back on. And so we've seen loads of people's, you know, their creativity's been sparked, and they've had the opportunity to actually maybe start their own business and do something really brave. And as a business owner myself, I commend anybody that does it, because it's the bravest thing to do. You put yourself on the line, you put everything on the line, and you put yourself out there. And it's very disheartening for them when they then try and get a mortgage, and it's very tough for us to get them that, especially right now, or especially in those early days. So self-employed, I don't want to make it difficult for them, and they come to us a lot thinking they have their own mortgage category, but maybe that's what's needed. You know, maybe they do need self-employed mortgages, and that is a thing, like buy-to-let mortgages, because like Lisa said, maybe they do need to be treated completely differently, that has their own sector that, you know, underwrites completely differently. Maybe that's something they can do. I personally haven't really seen the older borrowers being underserved personally in our brokerage. That might just be our clientele, but certainly first time buyers with the low deposits I've talked about earlier, and the self-employed are the people that we would really like to see support around. And new build properties, I mean, yeah, there's quite a few of them, isn't there, going up everywhere. And like Lisa said earlier, that the housing, we do need more properties being built. And I think this Help to Buy thing, I think that's going to be a funny area to watch now that it's only for first time buyers. Actually, if I'm honest, I think those new build plots tend to appeal to a second move. I think first time buyers tend to buy somewhere and then they move into that new build family home, whereas a lot of people now skipping over that lovely stage where you just have a flat and you just live your lovely life, and you don't, you know, you just have a young person's home. I think people have had to go, oh well, we better do it now, otherwise we can't do it. And I think that is a bit of a shame in some ways. Having a flat, I had a flat myself, and they were really lovely years, and I do think actually a house is a much bigger commitment, and you grow up a lot quicker when you have to put your bins out and all of that sort of thing every week, all those little things that you don't realise until you have to grow up and buy a house. So yeah, I'm interested to see what happens there. I would like to see that new build being a little bit more available to homeowners as well again.
Brilliant. Thank you. That's a nice way to end, actually. We've kind of got the big market, kind of the view across the network and the club and personal as well. Normally I let Craig have the last word, or do I? I'm not sure. However, Craig's going to do his update in the next session. So I'm going to leave that question because there's a lot of things that I think he'll cover, Craig, going forward. So that just leaves me to say thank you very much, Lisa, Sarah and Craig. I think we've brought a lot of discussion here today. So thank you.
Thanks for having me.
Thank you.